What's going on YouTube? Welcome back to another video. I'm going to be breaking down this exact model that I look for on a consistent daily basis that I've been trading recently that's very consistent within the markets, making me anywhere from $3,000 to $5,000 every single day. So we can take note of this trade here. This is the exact trade that I called live with the live trading team yesterday, which netted us close to $3,000 on the day. We can see here, this is when I entered the position right there with the initial 2 contracts. And then as price went in my favor, I scaled in right here, scaled in once again, and then I exited my take profit right here at this exact high, which actually ended up being the exact high of day for the AM session. As you can see here, this was the exact executions, bought right here, bought 2 more right here, and I sold right here at those exact highs. And throughout this entire trade video, I'm going to break down exactly what I was looking for, the exact daily buys I was looking for, doing a top-down analysis approach, going from the higher time frames, identify my higher time frame trend, higher time frame support and resistance levels, and then we go down to the lower time frames. So after we identify the higher time frames, we'll then go down to lower time frames to look for that lower time frame momentum, as well as the exact lower time frame signatures that's very consistent when it comes to not only getting a good risk to reward, but catching some really great moves and sniper entries. This video is packed with information when it comes to trading and trading education, so I urge all of you guys to take notes as well as watch till the end of this video if you want to soak up all the knowledge. And though I've seen success within my trading, it's amazing to be able to help you guys reach your first payouts or help you guys make your first $10,000. This is why the entire year of 2025 I'll be live trading as well as live educating every single day to helping every single one of my students reach at least their first payouts or helping them make at least $10,000 within their first year trading. So if you're someone who's a struggling trader or new to trading and want to be coached and mentored by me for the next 6 to 12 months to help you guys reach your first payouts or make your first $10,000 trading and become more consistent, then you guys can click that first in the description and fill out a form and book a free call to talk to me to see how I can help you. So coming down to the 4-hour time frames here, we can take note of a couple things. Obviously we have these previous day highs and then we have these previous daily lows, and within this range from the high to the low we can identify this bearish fair value gap. So we can obviously spot the separation between this first candlestick's low, between this third candlestick's high, and this creates an inefficiency. And inefficiency is very simple. We created an expansion to the downside and price left this inefficiency, which is this bearish fair value gap. If price were to find support at these lows, this creates an easy level to where we can anticipate price to come back up into, right? Inefficiencies are very simple. They're a level within the markets that's unbalanced. So once price finds support here, it will come back into that level most of the time to rebounce it. Same thing for the gap here. This is a level within the markets that's completely unbalanced. So as the market finds resistance up here, taking out this original high right here as a liquidity sweep, and then starting to see this drop lower, most likely you can anticipate price is going to come back down into that same gap level. Same thing with fair value gaps. We create this massive expansion to the downside. Price isn't just going to leave this gap unfilled. It's going to come back up into it. So if I can spot some type of setup at these lows that's indicating higher prices, I can take an easy long setup reaching back above these high points. And I think the best setup when it comes to this would be if we swept the previous daily low. Right, we marked out the previous day high and we marked out the previous day low. So it would not make sense for price to come all the way back up here, right? The previous day highs is all the way back up here. The previous day lows is right there. It would make more sense for price to come lower to take out the previous day lows than if it were to go all the way back up here to take out the previous day highs. So my main goal is I want to see us open up, come lower to take out these previous day lows, and then after taking out these previous day lows, I want to see if we can get some type of rejection, right? Basically, a rejection is an immediate reversal in the opposite direction. So once we take out these previous day lows, I want to see a reversal, right? To then from that reversal, we can frame a long setup to come back into that 4-hour bearish fair value gap. My main goal is I want to see price come back into this 4-hour fair value gap. You always want to have a goal within the markets every single day. My main goal is this 4-hour fair value gap. This is a level that's unbalanced. I want to see price come into this level. Well, now that I have the goal of where I anticipate price to come back up into, which is obviously higher prices, the only thing left is just piecing the puzzles together, right? Just constantly piecing the puzzles together. So the first piece of the puzzle is I want to see us take a level of liquidity. Level of liquidity to take out previous day lows. After we take out these previous day lows, the next piece to my puzzle is I want to see a reversal. That's my next piece. And then from that reversal, that'll be my confirmation that price is shifting in order flow from lower to now higher prices. And then the third piece to my puzzle is I want to see a pullback from that reversal to find a level of support to come back into that final target, which is that 4-hour fair value gap. Daily bias is simple as just 1, 2, 3. Where have we been? Where are we currently at? And where do we anticipate prices to go next? Where have we been? We've seen a massive drop to the downside, creating an inefficiency. Where are we currently at? We're currently within this range where I want to see price open up, come lower to find support, to then where are we going next to reach back up into that same inefficiency. So now I'm going to go down to the 1-hour time frames to see if I can get additional information. So coming into 1-hour time frames here, I'm going to let this play out here. Okay, we can see that 7 a.m. opens up, sees this drop lower. We can see 8 a.m. after seeing that drop lower, take out those previous day lows. 8 a.m. sees a immediate reversal in the opposing direction. Is the exact signature that I want to look for. We can see price came lower, took out those previous day lows perfectly, and then after taking out those previous day lows, we can see an immediate reaction in the opposing direction. This is very, very good because this means that once price took out this lower level, it could not continue going lower. Why are you going to go against the current order flow? Right? If price were to be bearish, it obviously would have taken out this previous low and continued to make an effort to go lower. But the fact that it took out this previous day low and then saw an immediate rejection, right? A strong rejection wick right here to see a push in the opposite direction means that once price came down here, buyers started to step in to go back higher. You want to be in alignment with the overall order flow. Too many traders want to be against the order flow. If price wants to go higher, it's going to continue going higher. So why put yourself in a position to where you're trying to short the markets when you can't predict them? Instead of trying to predict every single move inside the markets, being a consistently profitable trader that's netted me over 6 figures in payouts, I simply just trade in alignment with the current order flow. If price wants to be bearish and it's showing me signs that it wants to be bearish, I'm going to go short. If price wants to be bullish and it's showing me signs that it wants to continue going higher, I'm going to continue going higher. Just being in alignment and not trying to predict the markets but react in real time as it's giving me information is how you become a consistently profitable trader and stick to it on the long term. Price took out this previous day low and then seeing this immediate rejection to the upside gives me the emphasis that price is currently bullish and I want to anticipate higher prices, and we can take note of areas of liquidity above us. So we have this original high right here, as well as we do have this high point back up here. So we have multiple areas of liquidity above us, as well as we still have that fair value gap right there from that 4-hour. So we have that 4-hour fair value gap plus areas of liquidity right here, creating a very, very easy setup. Where have we been? Seeing this push to the downside. Where are we currently at? We just swept a level of liquidity, giving this immediate rejection. Where are we currently going next? We're currently going back up into this area of liquidity above us, as well as this fair value gap. Easy as 1, 2, 3. Now let's go down to the 15 minutes time frame to get additional information. The 15 minutes time frame here, I'm simply just waiting for 9:30 to open up, right? 9:30 is the stock market exchange open for the S&P 500, NASDAQ, as well as the Dow Jones. So you obviously want to be trading after that 9:30 open. Before the 9:30 opens, we kind of just created our day buys of what we're looking for. So we can obviously, right, once again, saw that liquidity sweep, immediate rejection to the upside, creating this inversion fair value gap, right? This was supposed to be a bearish fair value gap, but the fact that price broke above this bearish fair value gap indicates that this bearish fair value gap is now inversed, meaning that the overall order flow is shifting from lower to now higher prices. An easy way to represent where you are within the markets is just by utilizing fair value gaps. This was supposed to be bearish to hold as a level of resistance to go lower, but the fact that it didn't and it was broken means that buyers are a lot stronger than sellers. So coming into the markets, it doesn't make sense for me to come into markets to short when price is giving me clear signs that buyers are the dominant. You want to understand who is the dominant within the markets and trade based according to that. So my entire emphasis throughout the trading day is I want to be trading in alignment with the dominant. So right now, as we break above this bearish fat gap, this indicates that buyers are a lot stronger, meaning that the best opportunities within the markets is going to be buys rather than trying to short the markets. Too many traders would see price come back up here and give this a little rejection and immediately think that it's going to reverse the whole thing, not understanding the bigger picture. You always want to pay attention to bigger picture and stop getting lost in the tiny minuscule things. The bigger picture is we took out this level of liquidity, and then from that level of liquidity saw this immediate rejection to the upside, breaking back above this bearish fat gap. Price can come all the way back down here. I'm still not going to be bearish because I understand the bigger picture. Price could come all the way back down here just to tap into this order block to then go higher. So it's very important to pay attention to the bigger picture and not get lost in these smaller time frames. Your picture is still higher prices to reach back above these high points, as well as back above that inefficiency above us. So as we take note here of this 15-minute inversion fair value gap, I marked out the 50%, as well as below it, we can also identify this 15-minute bullish fair value gap as well. So we have this bullish fair value gap below us as a potential level of support. So as the market opens up here at 9:30, I want to see us give a strong pullback either within this inversion fair value gap or maybe come down here into the opening of this second fair value gap right here to find a level of support to see us reach back above higher prices. So as 9:30 is about to open up here, I'm going to go down to a 5 minutes time frame. And I'm simply just going to look at the 5 minutes, just saying how do we react. Is price going to come down in here, seeing a mere reversal to then go back higher, which could give me a good emphasis, or is price going to open up, come lower, see a little bit more of a drop to come down here, and then see higher prices? The higher time frames is very important because this gives you the overall vision of where the marketplace is going to go. And coming down to these lower time frames, you're simply just seeing how is it going to react at these specific levels. So I'm going to let this play out here. Really strong drop to the downside, kind of breaking back below this inversion fair value gap. So at this point, I did not take the trade inside of that inversion fair value gap because it has yet to show me signs that price was going to find support. Instead, I'm going to wait for price to come down into this bullish fair value gap below us, which we can see price came down into that bullish fair value gap. It tapped the opening, right? That 15-minute bullish fair value gap. It came down into it, tapped the opening, and then started to see this rally higher. On the lower time frames, this is what it looks like. So basically on the 1 minute time frame, you can see it came lower into that 1 minute fair value gap and saw this rejection to go higher. How I trade is based upon manipulation. So we could see this candlestick opens up right here, created that manipulation lower, and then from that manipulation we saw an immediate rejection back into the opening price. So once price came back into that opening price here, it was signaling to me that we created that manipulation, and then buyers started stepping in. This is where I entered my trade position right here. Exactly right here is where I entered my trade position. And the reason why I did not take the trade earlier is because price never gave me that manipulation. 9:30 opened up, and it opened up and just went lower. It went lower and lower and lower. Did not give me the signs I was looking for. I want to see it open up, go lower, to then see a immediate reaction. The fact that it opened up and went lower means that it's not yet ready to find support. But the moment that it came down into this bullish fair value gap right here, opened up, went lower, then saw that immediate reaction, that was my overall confirmation, and I was able to add to my position right there. And basically I was just targeting back above these high points from 2 to 5 a.m. EST. This would be the London session, and our take profit was right there at that London session high for almost a 4-to-1 R. And as we can see here, price kind of consolidates for a little bit, and then as we get this break to the upside, I was able to scale into my position right here. So as I scale into my position, what I do here is I adjust my stop loss. So I adjust my stop loss just back below this low right here. So again, I scale into my position for a second time, right? If I anticipate that I've caught a breakout, right, or basically some type of anticipation to where I feel like I got a great entry, a sniper entry, I'm going to scale into my position, right? I'm going to scale into my position heavily, and I'm going to maximize on my overall reward. So as price goes into my favor here, I scale in and I adjust my stop loss once again. Now my new stop loss is just back below this low. So I'm gonna adjust this right here, just so I can show you guys for representation. My new stop loss is just back below this low. So as I scale in, I make more money on this trade. But since I trail my stop loss, I risk the exact same amount. So for my first position, let's say I was risking about $600. When I scaled in and I trail my stop loss, I'm risking $600 again. Then when I scale in for a second time and I trail my stop loss again, I'm risking $600 again. But if I have a great enough take profit, I make more money on this trade. So even though my risk is still 600, my profit goes up from 1200 to 1300 to now 1400. So I maximize my overall reward on this trade idea, yet still keeping the same trade amount, right? This is why it's very important that you want to trade in alignment with the order flow, because as the order flow is bullish, it's going to see a breakout higher, meaning I can keep adding to my position and trailing my stop loss tighter and tighter because I know this is going to break out. It's very important to not go against the overall trend and always pay attention to the order flow. I'm gonna let this play out here. Price came down into me once again right there. I think I scaled into my position right here. I don't think I scaled into my position right there. I think it was more so like right here, but it's all right. We can see price finds support right there. And then we see that final push to the upside, taking out those London session highs. So it wasn't actually right here, it was actually right here. So we can obviously take note of that original setup right there when price came into that first survival gap, seeing that rejection. Yup. And then I scaled into my position once price gave me that initial pullback right there. And then as we saw that rejection right here, I scaled into my position for a second time, and we can see perfectly I got out of my trade right there at those London session highs. Perfect. This trade idea alone made me over $3,000, and on this week alone, trading for the last 5 days with my team, we are currently 5 for 5 on the week, and this week alone I've made well over $9,000. This was a very great trading week. We were very patient throughout the entire week, showed up every single day, educating my students every single day, helping them become consistent, helping them focus on risk management, psychology, technical analysis, and helping them to reach their first payouts and helping them make their first $10,000 trading. If I could do it, anyone watching this video can do the same, and it does not have to take long. The only thing you're missing from where you are currently now to becoming a consistently profitable or even potential full-time trader is someone like myself to be there for you, to coach you, to guide you, to mentor you from what not to do, and to do exactly what you should do to becoming consistent. So if you're a struggling or beginner trader and want me to personally coach you through the ringer to helping you become a consistently profitable trader to guarantee that you can get your first payout or at least $10,000 within the next 6 to 12 months, make sure you guys click that first in the description and join the Spark Trading University. That's gonna be it for a video. I hope you guys got a lot of value from this video and took a lot of notes. Make sure you guys click that like button, subscribe if you're new to my channel, and comment what you guys want to see next. I'm your mentor, Arkhamtrades. Be safe.